Good morning, everybody. How you doing today? Give me a quick thumbs up if you can hear me. Make sure we're all hooked up. All right. Thanks a lot. Good morning, good evening, good night, all around the world here, wherever you're located. Happy Thanksgiving to everybody here in the U.S. Excuse me. I just got done getting the turkey ready for the oven myself. And it took me an extra couple minutes here to get things rolling. But we are ready to rock and roll here. And I hope you're seeing everything good. Looks good, looks good. Hello. So day 9, for those of you who've been on this journey with Andrew and myself and the guys over at Forex Signals, for the last 9 days now, we've been doing a little free video overview just to basically get to know who we are, get to learn a little bit more about your trading, to help some of the newbies there, and to also give some tips and pointers to those of you like myself who've been around for a while. And this is day 9, and tomorrow, Andrew and I are going to come on live and have a little roundtable discussion, if you will. But for today, I'm going to talk about taking your trading to the next level and the things that you need to know and learn to be a successful professional full-time or part-time trader. It says, make sure you bring enough turkey for everybody here. Yeah, I know, right? I added this in just last night. I'm going to show some trade examples from a while back. Some of these are recent, some are from a few years. And I'm going to show a little bit of some of my older track records and things. And just to give you a little disclaimer, we're here to help educate you guys and gals. And being around the market for 10 years and running websites and seeing all the scams and things that go on, the guys at Forex Signals made it really clear. Look, we're not here to call trades. We're not here to share all our trade records every single day. We don't want you to judge our education on if we made a winning trade on the euro US dollar today or yesterday. The nice thing about it is when Andrew and I are doing our trading, it's going to be live and in real time for everybody to see. So you can see the sort of proof in the pudding there. I posted a couple trade examples in the last few days, and they've all been good. Andrew's trade examples have been good. I mean, we're doing good. But like he said, 50% of the time, we're going to win. 50% of the time, we're going to lose. It's all about the risk to reward and money management. And I'm going to show you some of my past percentages too, because that's a question I would have. I mean, if I were you, I'd want to say, who are these guys? Are these some marketing junkies or who are they? But I want to show you that I'm the real deal and I've been around for a while and I have a lot to share. I have a lot to learn still. You know, it's never ending. Like I said yesterday, it's an art for sure. But just to move on through some of these slides, and then I'm going to show you some trade examples and some different techniques that I've been using to take pips out of the market. So how to trade like a professional. Basically, we talked about psychology. Like Andrew mentioned last week, psychology can be 60, 70, even more % of your success. And it's the part that a lot of people don't really like to talk about and don't enjoy talking about because it's not as exciting as trying to say you're going to buy a new Lamborghini or you're going to make 100 pips overnight on some pair, or you bought some new things, or you're building your account 100% in a week. You know, it's not as fun to talk about psychology and the patience and controlling the greed and trying to set realistic expectations and managing the money properly. That's not the sort of sizzle, but I think it's sort of the steak. I mean, that's really the meat and potatoes of the whole thing, with my references to Thanksgiving meal here today. Next, risk tolerance. If you're going to trade like a professional, you have to have really good risk tolerance. I'm going to show you an example coming up how I took a little $300 account to over $10,000 in a week just to show you it can be done, because I'm sure we've all done it. I mean, maybe you haven't, I don't know, but you can gamble in the markets and push the leverage and you can make a ton of money, but you can also blow it all right away. So I'm going to show you a couple examples of that here in a little while. Next, technical and fundamental analysis. I've heard and read and basically taught for a long time about technical analysis and fundamental analysis, mostly technical. We did fundamental yesterday, and you can tell I know about it, I understand it, I appreciate it, but I don't use it as my trading entries and exits. But technical trading is a different story. It doesn't take a lot to find a good technical strategy or system. The key is in your implementation. And I think I remember Andrew talking about doing a challenge. You know, if you can do 5 trades, 10 trades, he asked for 25 trades where you follow it exactly to the T and then decide if it works. And most people can't because you get so impatient. You know, once you have 4 or 5 or 6 examples under your belt, you want to try something else, or, oh, maybe it's better on a different pair, or maybe it's better on a different time frame, that type of thing. So you get the idea. You've all probably been there. Let's see, what else do we got here? Asking the right questions. So I think that the power of your psychology and the power of your success as a trader, and really as being a good, successful person generally in life, is asking the right questions. So I think that instead of saying, why did I lose over and over again, you should say, how can I make my trading better? How can I learn from the mistakes that I had? How can I learn from these stepping stones? Remember my example last week about the auto dealership, and if their door breaks on the dealership, they're not going to close down and give up. They just fix the door on the business and they move on. They don't even think about it. If you spill coffee and you own a coffee shop, you try not to do it more, but you don't close the coffee shop down. So if you have some losing trades or you get in a bad rhythm, bad streak, the best thing to do is assess what you did, look at your journal, make sure you take really good notes on journaling, take a little break, get away from it, study some more, and get back in it, because you can make it a success if you give it time. And then it brings us here to, I think this is our final or second to last, journaling, reviews, and goal setting. So this has been big for me, especially back in the beginning. It's sort of a pain and it takes work, and it's probably the least exciting part for me personally when I do my trading, is to keep a journal. And I started doing it online on some apps and things like that. But obviously we can see our trading history anytime by looking back in the MetaTrader 4 terminal or whatever platform that you use. But to actually have notes about, okay, I took this trade at 7 p.m. I took it because of a trend line, support, or resistance. I looked at the other pairs. I researched, and there wasn't any news coming out for 3 or 4 hours. I felt comfortable with that. My risk to reward was 0.5% or 0.25% or 1% or whatever you decide to use. And you write down those things. And it's also sort of nice to put a scale from 0 to 10 in your journal, how comfortable you feel, how emotional you are, how confident you might be in this trade. And over weeks, you start to see this stuff, and you start to realize why some of these mistakes are repetitive. You know, as a doctor working with patients, I always, if we're talking about headaches, for example, somebody has a headache and they come in, it's all about the questions we ask. And we were taught back in professional school, if you ask the right questions and you ask enough questions, sometimes you don't even need to see the patient, right? And that's sort of how it is with your trading. If you ask the right questions and you keep notes in the journal, sometimes you don't even really need to make that big of a change to have a successful future in your trading. Let's see. I'm just reading some notes here in the chat. Yeah, hi everybody. Right, I know it. Thanksgiving, right? I know. Here we are. We're having a bunch of people over, family on both sides over today, and making the big meal. We got the turkey in the oven right now, so it's sort of nice. Compounding profits. Next, compounding profits. If you're going to be a professional, the real way to build your account is to compound profits, and that's why we use that risk percentage in money management. And I think Andrew touched on it. We're going to talk about it a lot more next week in the premium room when that starts rolling. But to compound profits, that basically means that if you make, let's say, 1% in a day or 5% in a day, whatever it is for you, that as your account grows, that percent becomes bigger and bigger, and you get that logarithmic growth. What's the saying? How does the saying go? One of the most powerful mysteries of the modern world is compounding interest. I think that's pretty much how it goes. And Warren Buffett here in the States, you know how his strategy is. Slow and steady wins the race, and now he's making billions and billions of dollars every year with the same strategy that he started out with in the past. Next, we'll do just a little touch on correlations. Yeah, it's funny. Stop with talking about the turkey. They said you're making me hungry. It's going to be really good, I think. Correlations. So we look at other pairs. Again, I don't want to keep repeating this, but Andrew went over the correlations. I think he did a talk about that, or most of it was about that. If you're trading a US dollar-based pair, you want to look at the other US dollar-based pairs, at least the majors. So if you're going to put a trade on the Great British Pound US dollar, what I do before I place any trade is I look at the euro dollar and the Aussie dollar. And I also look at the dollar Canadian. And if everything's following this correlation, sometimes I change my mind and I say, wait a minute, maybe the Australian dollar is going to give me more bang for my buck. Or maybe it's closer to an ideal entry than the pound dollar is. And obviously, I'm not talking about the pound here, just the dollar correlation. And then you look at those things. So if you're looking to buy the pound dollar, and you really believe that the US dollar is weak, maybe you switch over to the Australian dollar for a while. It depends. You have to look at those too. So then you can look at the pound versus the Aussie. And that's the kind of thing I like to look at. And yeah, technical trading, you could just look at a chart and trade that one chart and do pretty well. But I like to sort of be well-rounded. And I talked about that in the past a little bit, looking at different pairs and finding the correlations. Fibonacci levels, we did not get too deep into Fibonacci. A lot of traders use Fibonacci solely for their entries and exits and projected targets, and they use them with harmonic trading, with Gartley patterns like the bat and different things, the crab. I do use Fibonacci quite a bit, especially with my divergence trading. I'm going to show you a few examples of that, but the key is to have those levels set and know what they're all about. And with the Fibonacci, to give you a 3-second overview on this free little quick summary that I'm going through today, if a pair retraces back to a certain Fibonacci level, we expect it to continue on to a certain length using a Fibonacci projection. So the more it retraces, the less we expect it to expand. That's just the simple Fibonacci rules. And it's sort of cool having a degree in biology and chemistry and that type of thing. We studied Fibonacci back in college, and it had nothing to do with trading, and it shows up in the world. So those of you who are into trading have probably seen the patterns of a sunflower, the patterns of the little florets on the cauliflower, or the ridges along a pineapple, the nautilus. We've all probably seen some of those. And if you haven't, definitely look at this word Fibonacci and copy it or type it into Google and take a look at it. Very interesting how it happens. And then again, like most things in trading, the more traders that use it, the more it becomes a self-fulfilling prophecy, and it starts to actually work pretty well a lot of times. Divergence trading, that's one of my favorite ways to trade. I don't do it all the time. I like getting on a trend, obviously, don't get me wrong. Who wouldn't like that? But picking bottoms and tops is difficult, but I use divergence trading for one big reason, and that is it lets me get into the markets more often. It lets me watch where I want to get in and get out a little bit more precisely because of the filters that I use, like stochastics and MACD. And then the other thing is it has a very tight stop loss for risk to reward for me. So some of the biggest risk to reward ratios that I've had in my trading career, if you will, are with trading divergence. Next, the cost of trading. And this goes beyond how much you're willing to risk in your account. The cost of trading involves the spread, the commissions that you might have, the cost of your trading computer, the cost of your time to sit and learn, the cost of your mouse, the cost of your lighting, the cost of your chair, the cost for courses that you buy. But mainly it's the money you put in the account and how much time you put in. Because you can trade on a cell phone if you want to. And a lot of people do. I mean, I know I watch my cell phone throughout the day if I have trades going. But there's a lot more cost to trading than just simply what you put into your account. So don't forget to keep track of that, because we talked a few days about treating trading like a business, and that is keeping track of all those things. And here in the States anyway, I don't know how the rules work around the world, but in the States, you can write this off as a business, and you can have home office deductions and write off losses and expand them out. So thinking outside the box is one of the last things I have on this slide. So I like to think outside the box, sort of like this picture down here with the mind being expanded. You have to think about the markets like a herding mentality. And an example I have of that is when, let's say you're at a store or locally here, because I think a lot of you know that I live, in the States, and there's a casino not too far from me. And they give out free perks sometimes for people. So we'll be in there eating lunch or having dinner with friends, and there'll be some announcement about some free perks. You get a free clock or something like that. Usually it's some junky thing, but you get the idea. Or a sweatshirt with their logo on it or something. But it's interesting because you'll see there's nobody there waiting in line. But then once there's one or two people, other people want to come and see what's going on. And then there's more and more and more. And pretty soon there's this big rush. And then I'll go and ask one of the workers, because a lot of them there are cousins of mine and family. I'll say, what's going on? And they'll say, I don't know. It's been going on for 8 hours, and all of a sudden everybody's going crazy. The same thing for those of you who drive in busy traffic or have ever taken a long road trip. If there's an accident on the side of the road, or there's something going on the side of the road, the traffic goes 5 to 10 miles an hour for an hour before that. And when you get there, there's no bottleneck. Everybody just has to take their 2 seconds to look, right? Everybody takes their 2 seconds to look. And when everybody takes their 2 seconds to look and get sort of nosy about it, it just sort of accordions back and it affects everything. So that's how the markets work. You'll see this sort of organic breath of the market, like they called it in the past. You got to let these pairs breathe a little bit, let them move, that sort of organic movement up and down. The trades usually, as you know, don't go straight up or straight down. They go sort of up and down, and you got to let that flexibility there. And you look at the psychological levels. You look at the big round numbers on the charts. You look at the time of the day. How much volume is in the market? Is it the opening of London, or is it the middle of a real slow Tokyo session? And if it is Tokyo session, are you watching the ends a little bit more because of that? That out of the box sort of thinking where you summarize all these points together is really what can make you more of a professional. And teaching this and talking about this to all of you here in the room live helps my trading as well. And that was one of the reasons why I decided to work with them at Forex Signals. Not because they're just awesome guys and gals, which they are, but it helps me. I mean, it makes me better. I mean, a lot of this stuff I know, but I haven't talked about for a long time. And that's sort of what I want to pass on to all of you. So trading as a business, not a hobby, but, and this is where today's talk takes a little bit of a turn. You have some funny comments here. This is where the presentation takes a little bit of a turn. So if you're going to be in the premium room with Andrew and I next week and some of the other guys and gals, you have to get to know us, right? We're going to do complimentary one-on-one sessions with you. I think it's 30 minutes or something where we Skype chat, look at your trading, talk about your needs. Nick and Will and Dominic and all the guys there, they've been working really hard on getting the room up and putting out emails and doing the backside of things. But Andrew and I, our job is to trade. I'm not some guru marketer. I'm not sitting here trying to think about the best keywords for some website to get it higher in the rankings. It's just all about trading and all about you and helping you become a more successful trader while we continue to learn from each other and become better ourselves. And that's really just the honest, most transparent way it is. And that's the reason, if you haven't watched my other talks last week, that's the reason I've been on the Forex Signals chat room for 3.5 years, is I really appreciate Nick and Will and how open and honest they are. I mean, you can tell, they're good guys. I mean, with Nick's videos, you can just tell the guy's an honest guy and transparent, and he's been around. I mean, a lot of people who are like that don't make it, and he's been around and he makes it because of the relationships that he has and that they have with everybody in the market. So here's where it takes a little turn for me today. Being that it's Thanksgiving, I figure we could loosen up a little bit here, right, in the States. Surround yourself with like-minded people. I sort of touched on that. There's going to be haters. There's going to be the trolls in the chat room and friends and family and things that hate it. But you want to be surrounded with like-minded people, at least for the business. Not your whole life. You got to get away from it, but at least in the business. And the following are some fun screenshots, trades, and more. So I'm just putting these up here to sort of summarize the week, because tomorrow Andrew and I are going to be talking live one-on-one, doing question and answers. We have some questions written down already that people have been asking, and that'll be our last session here in the free room. And then if you want to follow us, it'll have to be in the premium room. And the premium room, by the way, is free as well. You just have to have a trading account through one of the links from Forex Signals. So there's nothing to give a refund for. There's nothing, if somebody says we don't like it, they can go away and they didn't pay $1. So I like that, because I don't want to lose sleep about making sure everybody's happy with things. I mean, if you're not that happy with it, you go somewhere else, or you give us some criticism and we make changes. But these are sort of some fun things I want to share with y'all. So looks like my head's cut off a little bit. Let me move my head down just a little bit. There we go. So you've seen these all over the internet. Maybe you've done it before with more or less, I don't know, but I put videos on YouTube years back, I think 6, 7 years ago, 8 years ago, about turning little bits of money into big amounts of money, because that's what people want to see, right? So this is one of my own live accounts, took $300 into $11,900. I think it was 3 days or a week or something like that. And I have all the videos there if you want to see them. It's not fake, it's not demo, but it can be done. I mean, if you put $300 in your account and you lose it 5 times, the 6th time you might make some money, but that's not the way to be professional. That's the way to be pushing everything to the max. You can do it for fun. You can do it as a hobby, but it's not professional trading, but it can be done. And that's sort of what lures people in. So my advice to you is get excited about the potential of Forex, but don't try to turn $300 into $12,000, because you're probably going to lose the 300 way more than you're going to make the 12,000. So, but it can be done. I've done it. You could do it again, but to be consistent over time so that we can have our bills paid, that we can keep the roof over our head, that we can have money for retirement with our family. The way to do it is being a professional and controlling it. So the next slide that I want to show you is this one. This is from my FX book. This is just one of my track records. This is from, I think, a couple years ago. And again, I don't want to repeat myself, but if you've been watching the videos, you know that I've changed brokers probably 7, 8, 9, probably 10 times in the last few years, because in the US, the rules here really suck right now, to be frank about it. And the Dodd-Frank Act might be repealed with Trump. I don't know. But I like to use brokers that are not in the US. So here in the US now, what we use at Forex Signals is FX Choice. You can find the link there. And Fund Account, you get in the premium room. I've used many other brokers. I could list them all here. A lot of them you know. But and for those of you who've been following me in the past, you know. But this is just sort of, this is, I think, 1,500 trades over months and months and months. And you can get an idea of how I trade. 135,000 net profit. And you can see the currency pairs over to the left. I know it's sort of small on YouTube here, but the percent won, you know, you can see the numbers. Again, I'm not showing this to impress you or try to say I'm the best, because this doesn't show all of my trading history, obviously. I lost a ton of money in the beginning, and that's why I stuck around, because I like a challenge. But you can see, I mean, most of these are 80%, 60%, 100%, 75. I don't have one single percentage that's less than 50. Now, there is losses here that are quite large on some of these, but then the winners overtake it, and when you total it up, it's around 135,000 net profit. And you can see my Euro Aussie, which is still my favorite currency pair to trade. I like dollar yen and things like that too. But yeah, dollar yen I did okay on, dollar Swiss. But the darn dollar CAD, you know, dollar CAD and me are just sort of, we don't jive all the time. But I'm still working on it. Yeah, I want to show you just a couple examples of some trading. So divergence trading, again, we're going to teach this more in the future, but I have it sort of cut off here so I could fit my video in here. Let me just blow this up a little bit. There you go. So in divergence trading, we look for a divergence between the MACD and the price action, and then I use on the bottom stochastics as another filter. So as you know, these are lagging indicators, oscillators, but it's sort of a cool way to trade. So if you can see this, I'm going to show you a few more in a moment, but if you can see this here, I have the Fibonacci's drawn in, and my target is the 100 level, and my target 2 is the 161.8 level. And then we go even further out to the 200s and 400s. But this trade was sort of a classic setup. There's a lot more that I look at besides just this, because if you look at just this, you're going to go broke. But this is sort of a nice little trade setup, and it worked really, really well. I don't remember the pair that it was in, because this was taken, I think, yeah, this was back in March. This is a little more explanation. I know it's super small, and I'm not able to zoom in on this currently, but this is another divergence trade. This was back in April. I think this might have even been April last year. But you can see we had higher highs in the price action, lower lows in the MACD. Stochastics wasn't overbought. It was a beautiful trade setup. And of course, hindsight's always 20/20, right? We can always look back at this and look smart. To do it in real time is a whole different picture. So that's what we'll be doing in the premium room. So just sort of take this for what it's worth. I took off third of the order when I got down to the 100 level. I took off the other, which is about 48 pips. The second third at the 161.8. And I was trying to shoot for the 261.8, missed it by 2 pips. So I moved my stops down and closed out the final order here at the original 161.8. That was the final third of the trade. So that's sort of how I like to trade divergence in a nutshell. And obviously there's more to it, like I keep saying, because there obviously is. But it's just sort of a fun technique to use. This was a great picture, and you may have seen this on a YouTube video that I put out years and years and years ago. But this is the pound dollar on the 1 minute. It's a triple top. We call it sort of a crown, and it's sort of hard to see here. But if you look real closely, this is the 1.450000 level, and this is that sort of herding mentality that I was talking about in the psychology of trading. That pound did not want to go past that 1.45. It went up and tried and got pushed back. Went up and tried, got pushed back, broke lower. Went all the way up and tried, got pushed back. So where do you think this is going to go? Down, right? If it can't go up, it's going to go down, or it's going to recoil and it's going to go down more later. And you can see the MACD. We have lower, 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 lower stochastics in the overbought area. And if you put your stops above this, you would have had a great trade, and the thing continued to go. The thing that's cool about this, if you look at charts as much as I've looked at charts over the years, these are 1 minute bars, candlesticks, but they're pretty noticeable. I mean, this is 45. And this is like 50 pips right here. I mean, this thing is really cranking. So just a cool pattern. You don't see these all the time. They do show up, but just something fun I wanted to share with y'all. Let's see. One question said, do you use stops? Yeah, I always use stops. Always use stops in my trades. Sometimes if I'm getting in something quickly, I'll put the stop on exactly right after I do the entry, but I always use stops. And with the divergence, you have to have a little cushion there. Depends on the time frame. One of the questions here says, do you think divergence applies on the lower time frame, i.e. 5 minutes? Absolutely. Absolutely. The big hallmark that you need to remember, and again, this is just my opinion, the longer the time frame, the more important and more powerful any pattern is, whether it's a triple top, head and shoulders, divergence. So obviously longer time frame, you need bigger stops because you're going to have more of that whip to the market. When you're sitting here and you're in the groove to trade and you want to trade, number one rule is don't make up trades. But the only way to really have more active trading on this type of strategy is to go down lower time frames. And it's sometimes fun to scalp around and do that. And you can be profitable. But the way to make the bigger money, the long-term stuff, is to zoom out a little bit longer time frame, hourly, 4 hour, and you get on that trend. And hopefully you can do some trend trading, or at least doing some channel trading, highs to lows. Here's another one, sort of a fun one. And I'm going to go over, I think we're doing next week, MetaTrader techniques in the premium room. I'm going to show you, if you don't know this, a lot of people do, but again, you're all different levels here. I like to talk to you one-on-one, but I don't know if you've been doing this for 30 years or if you just started last week. But in the history on MetaTrader 4, if you take your trade once it's done and you drag it onto the chart you were on, you can get these arrows. And here, the blue is the buy and the yellow was when I closed out. And this is a dollar Swiss. Each one of these bars is about an hour. The best entry was about 150 pips. And you can see how I put on all these trades, stops were underneath this, and then it sprungboard up. I think I was in bed somewhere in the middle of this, so I wasn't able to go through it the whole time and watch it and monitor or get out. Here's another one, and I just want to remind you, treat this professionally, but you got to have some fun. If you don't have a passion about this, I mean, I've been looking at charts for years and years and years, and I still get excited about them because I think about all the potential it has. I mean, even though the markets are not moving a ton today because of the bank holiday here in the States, just the amount of volatility that we had right now, if you were able to capture that, you could make thousands and thousands of dollars today. I mean, there's just so much potential here. And that's why people get sort of lured into the Forex. And we want to keep you from making the same mistakes that we did back in the past. So let me take a look at time. Yeah, I'm going to be cutting this off. I'm just about done. But you can have some fun and make profits. This is the trade in the euro yen that I took. This was June. And to be honest, I don't know if this was June this year or last year, to be honest with you. But it was around 200 pips. And you can see I got in here at the bottom. And the pair shot up. I held it all the way because I had no reason to exit. I even added more, if you can see my mouse right here. And I got it at the top. So one of the things that's so big with trading is people don't let their profits run. And I had no reason to exit this trade. Even though I made all these pips when it shot up so big, that's my tip to you is, we had this huge move up. Obviously, there was some news or something happened back then, right? And I put my Fibonacci levels up, and I think I was looking at a moderate fib retracement on this, and it didn't hit it. And then it sort of rounded up, made new highs, came down, made higher lows. And then there was this trend line established, and I'm like, hey, let's let this sucker go. And I ended up getting out at this level. I think when I looked left on this trade on the longer term, this is the 5 minute, I believe. When I looked left, there was a area of resistance that was here, and I was fine with that. So the key is let the profits go. Move your stops if you want to move your stops up to lock in more, but give it some room. I think Jenny and I were talking in the chat room here. Thanks for that, about the Euro Aussie trade last night. If you saw that I've been in, I'm going to take a look at that real quickly here. Yeah, so it's still going great. I told her quite openly what my stops are at, 43.20, came close, didn't hit, and now we're up another 40 pips. I think I'm up about 140, 150 pips on that trade that I posted a few days ago in the room. So the key is just give it some room. Give these trades some room to breathe, have some fun, don't stress out about it. When the pips run, let them run. And here's another trade that I had in the euro yen on a 1 minute chart. And you can see all the buy entries at the bottom. The thing moved up and I'm still in. Obviously, if you see the buy lines are still in, there's just no reason to get out yet. I mean, if you say, oh my gosh, I made 50 pips and that's your plan, that's great. If your take profits are hit, that's awesome. But if you have a larger goal, larger target, let it go. That's one of the top problems I see with traders I've talked to is they let these trades hit their stops over and over and over, but they just don't let the profits run to get to their take profit levels. And like Andrew talked about, if he makes 50% of the trades winners and he's always 1.5 to 1, 2 to 1 risk to reward, whatever it might be, that's all you need to do to make full-time income. So let them go. Let them go if they're going, and move your stops up. But always respect the stop losses. Don't move those down. I don't like to add to trades that are going against me. Now, there's certain times where I will scale in or scale out, but we'll talk about that more in the future. And I think this is the last one or second to last one. This is the reason I'm putting this up here is it's a really good example of the mindset of trading. And here's how it is. This is the Euro Aussie, as you know, my favorite pair for a year or 2 or 3 now. I have my buy orders down here. This is a 15-minute time frame. So I got out most of my order. I think it was 2/3, something like that. I got out of my trades here before a news release because why? I was hoping the pair would shoot up on news, but I didn't know. Nobody really knows, right? So I got out before the news, most of my order. Again, I think 2/3, that's usually what I do. And I let the other part run. And I was able to get in and get lucky. I mean, that's basically luck right there. And I got out right up in this area. And if you zoom in on the smaller 1-minute time frame, you can see that this went on for, I think, a good 10 minutes. And actually was able to buy a little bit more on a Fibonacci retracement and then close out as well up here. So it's not saying that you have to get out of everything before news. These days, I get out most of the time before news, but you can take off 90% of your order. I think next week, Andrew's going to be talking about how to close partial orders and things like that. So 68 pips before the news, over 140 pips on that extra third or so, plus the extra added after the news. So you can just totally control everything. You don't have to worry about gambling in the markets and getting caught with your pants down on bad trades. I mean, you can control it all. But when the news is about to come out, that couple minutes before and after this, we all know that's when you don't have a lot of control due to slippage and gaps and things like that. I do have one more. Let's see, what do we got here? Trades closed from Sunday evening through Monday morning. All sell orders profitable short on my favorite Euro Aussie. And you can see here the gap on the left. I think that was when market opened on Sunday. So I had my stops up above this. I remember this quite well. And the pair was going down, 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 and I was selling. Now, what you don't see here on these red sell arrows is my lot size. So, you know, that's where, I guess in a nice way, that's nobody's business, I guess, if you're trading. We don't need to know if you're trading 0.01 or if you're trading $1,000 a pip. I can tell you I made thousands of dollars on this trade, but, you know, that's not really the point here. The point is that I put my biggest orders in initially, and then I add and add and add. Usually for me, I like to do this pyramiding thing or pyramiding down, stepping down, and adding smaller orders as I go. So I added all these orders in all the way down, wrote it all the way down. There was no reason to exit. I mean, there was just no reason to exit, in my opinion. So I kept going, and then I got it all the way down here. I think, I don't know how many pips we did here. 28, 19, 27, like 120 pips or so. But the key is I like to scale in. Other people don't. When I'm winning, now's my time to scale in. If I got the trade idea right and I'm going well on my trade, I like to get in and build it up because that's where I make most of my profits. If I'm a loser, I do not scale in. I do not add to more that go against me, with a few small exceptions. And I'm going to teach you about those next week or the week after in the premium room. So tomorrow's the final day of this series. We're going to be live doing question and answers tomorrow at 7:45. So we did tweak the time. If you like to watch these live talks, make sure and check the time on this one. We changed it to 7:45 tomorrow. That's Friday morning here in the US. And I'm going to be running the software and then calling Andrew up on Skype. This is the first time we're doing it. We did test it to make sure the audio works. So we're going to give it maybe a minute or two, just make sure it's sounding right. And we're going to go through some questions and give the best answers we can to some that we already have written down. But then we're also going to be looking at the chat room and talking with you guys a little bit more. And then next week in the premium room, if you're in there, we're going to do some open sort of roundtable live stuff. And then we have a schedule that we're set up to present on different days. We each have a topic each day. And the cool part is that we're going to start coming in live a lot more, 2, 3, 4 times a day sometimes, looking at trades, talking about the markets in real time. He's going to be controlling the UK hours, most of them. I'll be around most days for the US, and then also coming in fairly often during Tokyo session for those of you here in the States or in other countries where you're awake. So that's really all I have for you today. I did go a little longer than I thought I was going to go because, I just love this stuff. And for those of you that got to know me a little bit over the last couple of weeks, because we've been Skyping and sharing messages, I'm really out for your best interest here. I don't have any products to sell you. I'm just trying to help out. And it's just a win-win-win working with the guys at Forex Signals because they're doing the same thing. And I just think it's a true win-win-win. And I would take advantage of it. And we'll move forward together. So hopefully I will see you all tomorrow morning. And then I'm hoping we'll see you in the premium room next week. That's all I have for now. Thanks for watching. Happy Thanksgiving and happy trading.